A major Danish pension fund, AkademikerPension, managing $25 billion, has announced plans to dump all US Treasury holdings, citing rising credit risks and doubts about America's long-term fiscal sustainability. Bloomberg reports the move reflects a growing search for safer alternatives, as European capital quietly signals eroding confidence in the US financial system. Analysts warn this symbolic divestment could foreshadow wider European scrutiny of Treasury debt and mark the first public crack in the dollar's traditional safe haven status. Europe's economic confrontation with Washington is entering a far more dangerous phase. As President Donald Trump revives the trade war, Bloomberg warns Europe may respond not with tariffs, but with capital. The battlefield is shifting from goods crossing borders to money moving markets. This is no longer political pressure, it is financial power, and it puts the stability of US markets directly in play. At the center of this threat is scale. Europe holds nearly $8 trillion in American stocks and bonds. These are not symbolic holdings. They are structural pillars of US financial dominance. Any move to sell, even slowly, could send shockwaves through equities, treasuries, and the dollar itself. This is leverage few allies have ever openly discussed using. Deutsche Bank delivers the starkest warning yet. The United States, it says, has one critical vulnerability. It lives at the expense of the rest of the world. Massive deficits are financed by foreign capital, recycled endlessly into US assets. If Europe decides it no longer wants to fund that system, the consequences would be immediate, destabilizing, and global. But Washington is dismissing the threat outright. Treasury Secretary Scott Bessent calls the idea of Europe dumping US treasuries a false narrative driven by what he labels media hysteria. He insists US treasuries remain the most liquid, best-performing bond market in the world, arguing that any large-scale sell-off would defy logic and ultimately hurt Europe more than America.
I just want to say this is a false narrative that there is no talk in European governments. This was a report written by Deutsche Bank that this could happen. The media has latched onto this. I think it is a completely false narrative. It defies any logic, and I could not disagree more strongly on that. If you look, the U.S. Treasury market was the best performing market in the world, or the best G7 performing bond market, and we had the best performance since 2020. It is the most liquid market. It is the basis for all financial transactions, and I am sure that the European governments will continue holding it.
Yet the warning still stands. Even partial financial retaliation would mark a historic escalation. Capital flows would replace tariffs as weapons, yields could spike, the dollar could weaken, and America's safe haven status could be tested for the first time in decades. Trump's trade war now risks more than trade. It risks the financial foundations of US power itself, while Europe quietly calculates just how much leverage it is willing to use.
As I said, sit back, relax. I am confident that the leaders will not escalate and that this will work out in a manner that ends up in a very good place for all, for national security, for the US, and for Europe.